Today, let us understand Standard on Auditing 200. This standard explains the overall objective of an independent auditor. In simple words, it tells us what the auditor is supposed to do and how the auditor should behave while performing an audit. Let us start with the basic idea. An audit means checking whether the financial statements of a company give a true and fair view. The auditor is a professional who examines the company's books and records and gives an opinion on whether the financial statements are reliable. Standard on Auditing 200 explains three major things. The first is the objective of the auditor, the second is the responsibilities of the auditor, and the third is how the auditor should conduct the audit. Let us look at each part in a simple way. The main objective of the auditor is to obtain reasonable assurance that the financial statements taken as a whole are free from material misstatement. Material misstatement means there is a big mistake in the financial statements. This may be due to fraud or due to error, doesn't matter. If is so big that it can change what the users of the financials think or decide about the company, then it is considered to be material in nature. Reasonable assurance means a high level of confidence, but not absolute certainty. The auditor gathers evidence, performs checks, and uses professional judgment to reach a conclusion. If the auditor is satisfied, he or she gives a clean opinion. If the auditor is not satisfied, he or she modifies the opinion. Now let us talk about the responsibilities of the auditor. The auditor is responsible for following the standards on auditing, maintaining professional skepticism, and using professional judgment throughout the audit. Professional skepticism means the auditor must always keep a questioning mind. They should ask questions and double check things to make sure the information is true. The auditor cannot simply trust whatever the management says. He or she must verify information, check documents, and look for signs of mistakes or misstatements. He should be alert of the conditions that may give rise to misstatements. Let us take a simple example. Imagine a company tells the auditor that it has sold goods worth 10 crore rupees in the last month of the year. A skeptical auditor will not accept this claim immediately. The auditor will ask for invoices, delivery proofs, bank statements, and other evidence to confirm that the sales actually happened. This checking attitude is called professional skepticism. Now let us understand professional judgment. Professional judgment means the auditor uses experience and knowledge to make decisions. For example, the auditor decides how much evidence is enough, which area needs more checking, and how to evaluate explanations given by management. Every audit is different. So the auditor must use judgment to decide the best way to carry out the audit. Next, Standard on Auditing 200 explains the responsibilities of management. Management is responsible for preparing the financial statements, maintaining internal financial controls, and giving accurate information to the auditor. The auditor's job is to examine what management has prepared. The auditor does not prepare the statements. The auditor only checks and comments on them. Another important point in Standard on Auditing 200 is ethical requirements. The auditor must follow the code of ethics issued by the Institute of Chartered Accountants of India. This includes integrity, objectivity, professional competence, and confidentiality. For example, if an auditor discovers confidential information while auditing a company, he or she cannot share it with outsiders. Standard on Auditing 200 also highlights the need to understand the entity and its environment. This means the auditor should understand what the company does, how it earns money, what risks it faces, and what systems it uses. For example, if the auditor is auditing a restaurant, the focus areas are cash sales, food inventory, and daily billing. But if the auditor is auditing a software company, the focus areas will be entirely different. Understanding the business helps the auditor plan the audit properly. Finally, Standard on Auditing 200 reminds the auditor that even after performing the audit, there are inherent limitations. Some things cannot be checked fully because of expertise limitations and cost limitations, among others. Therefore, the auditor gives reasonable assurance, not absolute assurance. To summarize, Standard on Auditing 200 sets the foundation for every audit. It explains how the auditor should think, how the auditor should behave, and how the auditor should perform the audit. It ensures that auditors remain independent, alert, and professional so that users of financial statements can trust the information given by companies. We have excluded audit risk in this video as we'll have a separate video to cover this. If you liked this video, Please like, subscribe, and share so that more people can understand the finance world easily. Do share your comments if you want to anything in particular.